Alrighty, folks. So that is another week almost over with. Today will be the final trading day for the week, and what a week it has been. Obviously, yesterday's main story would have been the PPI numbers. So it was forecasted to come in, as you can see, at 0.2%. However, it came in far hotter than expected, rolling in at 0.9% month on month. So it is kind of the first real sign that there is still inflationary pressures within the market. So with that being said, we could be seeing a little bit of wavering when it comes to the conviction of a rate cut in September. Now, if you take a look at the likes of the Fed Watch tool and such, yes, they are still fairly confident of a rate cut. However, this is something else to take into mind. The fact that there is the inflationary pressure there, it may sway the Fed back in the other direction to hold rates firm as there's still inflationary pressure. So we'll see obviously how the news and the spin of this goes over the next couple of weeks. We've still got time until that rate cut comes in, but for now that's the sentiment coming out from the market. If we move on to oil, yesterday we can see oil had quite a strong day. We did mention in yesterday's update that this 62-65 level, that's what it would need to hold if the oil bulls wanted to see topside, in which we did hold it. We moved up above, got a nice back test there just around midday before pushing all the way up to 64.06. So for today, it's really going to be the retrace down to 63.52. If bulls can hold that level, that it's 64.47 for oil going into the weekend. Just be watchful of this if we come back down and we're trading on the underside. So really anything closing under 63.52 or bearishly back testing it, then I would be looking for a continuation to the downside here. But for now, sorry. For now, it is getting to that point where we very well could start popping levels and actually go for another run. We left a lot of space on the way down here, so it'll be interesting just to see how oil plays out. But locally, that's the levels that we need to watch out for: 63.52, 64.47, and 62.96. And there you go. You can just also see where the supply and demand also sits there. So jumping on to gold. Gold yesterday, it wasn't able to continue any push to the top side. Now we are still squeezing high time frame. However, locally, as you can see here, we've been driving down. So the 33.56 was the level we wanted to see holds, and yeah, we absolutely failed it perfectly there, as you can see. So sold off throughout the rest of the day, down below the 33.42 target, and we closed off at 33.34. So really for today going forward, it's going to be the daily pivot at 33.46 that we would need to regain. If we can regain that, then I would look to move through the supply zones that we created throughout yesterday. Any failure to the top side, then it would be 33.18 that I'd be pretty interested in seeing. If you want to avoid downside, then I wouldn't want closures below 33.32. So just from yesterday's low, I wouldn't want to see any closures below that, or else we will be driving down lower on gold. And just quickly looking then at the sectors yesterday, the health sector was the strongest performer, coming in with a 0.5% gain on the day. And the only other ones really to come in positive there was the finance sector as well, with a 0.47% gain. But overall, good to see that health is the top performer yesterday. We do have a little bit of health exposure, but we'll cover that on a separate video sometime, because there is quite a bit to go through when it comes to our health sector coverage. But yeah, that's really it there. So you can just see for yesterday as well, Amazon was by far the best performer within the Mag 7 there, coming out with a 2.8% gain on the day. Jumping on to the S&P 500. So the S&P 500 there was having a fairly standoffish day, and actually finished standoffish. We only had this period of volatility here after the PPI data came out, far hotter than expected. So, that's pretty natural to see that bit of extended volatility. But one thing I would say, during the recovery, we continued to set higher lows on the way up while we squeezed on the top. So, kind of an inverted bouncy ball pattern playing out there. So that's pretty good, all things considering. The market may shake that off as with regards to the PPI data. If the market shakes that off, then yeah, I would see a continuation in the price discovery for the S&P 500, and that's really what you're looking to hold for the day. This demand zone with the low at 64.57, and then you have to get through the supply above at 64.80. So pretty easy where the levels are for the S&P 500, and I believe the same is shared on the Nasdaq. So you can see yesterday that we were flat until we came up to PPI data. However, with the recovery, we weren't actually setting higher lows each time. We set several higher lows, but then we broke the pattern. So we've opened up for today for the overnight futures market at the level that we need to be trading above. So get back above 23,798, and then I would be looking for an R1 tap. Any failure here overnight that we can't continue onwards, then it is just simply down to the S1. But overall, pretty straightforward with regards to where our levels are. Obviously, yesterday with the additional volatility, we didn't really change. Nothing really changed from yesterday's update with regards to where we need to start regaining. And lastly, the Dow Jones. And now, as you can see here, the recovery on the Dow Jones was far stronger yesterday. It's by far one of the best days the Dow Jones has had in comparison to the other two main indices for quite some time. But the sell-off from PPI triggered down into the daily level at 44,784, and then that's where we bounced off and continued upwards for the rest of the day. So really, any pullback from here, 44,949, that's the level you don't want to be going below. If we can pull back there and hold that as support, or even December, then I would be looking for a continuation to the top side, and hopefully the Dow Jones can get that little bit closer to popping for an actual all-time high. But other than that, folks, that is it pretty much for the week. We'll get through this final day and see what comes over the weekend. Remember, don't stay glued to the charts, and get out and enjoy yourself. And thanks very much for listening. Have a good one.